Okay, welcome to another video. In this video, we're going to be going over the trade recap for the day of October 15th. Specifically the trades that I took today and the opportunities that you could have taken. And to start off, I'm going to answer your question. I'm not sure how you say your name, Lalo, but you said if we're going to take a silver bullet trade during London session, do you look for bearish setups since London is the manipulation stage? I want you to elaborate on this because just because you're trading the London session doesn't mean you're going to look for bearish setups. Are you referring like to a specific day? Because it's different, right? Some London sessions are bearish while others are bullish. It depends on what your draw on liquidity is. So like say today, I didn't even trade New York even though I was bearish. My bearish bias only came in during the PM session, like I was mentioning earlier in VIP chat. Let's scroll up a little bit. Actually, I think it was just this. Yeah, it finally closed above the weekly fair value gap. Okay, I mentioned it somewhere above. Oh, I guess I didn't send an image, but I just said draw to the weekly FVG because he said, why don't we expect it to push up again? Be sure to mute your mics as well. So why don't we expect it to push up again? Specifically referring to NASDAQ. Because I did mention in the start of the week that we're going to be looking for an inversion fair value gap. This was also my bias from last week, and that's why we were bullish inside of this candle. So let's just mark out the concepts first, right? We have this fair value gap. It already traded twice from this fair value gap. Let me change the color so you can see it better. So look, we have this fair value gap, and we already had two wicks that tapped into it and ran higher. It was respected. And the idea is that this is a bullish weekly fair value gap, and this is a bullish order block. So we already traded from the bullish order block and the weekly fair value gap, and all that we're expecting is that this bearish fair value gap turns into an IFVG on the weekly time frame. So we want to see it close above this at the end of this week and become an inversion fair value gap so that we can continue on highs. So today, why I was bearish is because on the Forex version, we already did close above it, and what price typically wants to do is to come back into it. And that's what you see, and that's what is also going to happen on the futures once it actually does run up here and close, is that we're going to see this kind of pullback. And so today, after this huge move that happened during like 10 a.m. silver bullet, I was just bearish during the PM session when I saw on the 1 hour time frame that we had an inversion fair value gap. Where was it? Right here. This huge bullish fair value gap finally closed below it, and then the draw, which was right below, right here. Let me also make this lighter color so you can see how far it actually dug into it. Okay, so you guys see this? It's a bullish fair value gap, which is on the left, and now that we closed below it, we are anticipating sells from it. So that's why I was saying, like, my draw on liquidity is this weekly fair value gap, and I'm anticipating that it trades into it, right? So what I sent out earlier was this right here. We closed below it, then we ran back up into it. We created an order block inside of it. We started respecting the order block, and finally we also closed below this 5-minute fair value gap, which turned into an IFVG. And you can see that later it taps back into the IFVG, and we finally ran down. And from that point, we ran all the way down from this 5-minute FVG into it. Look, this is the 5-minute IFVG, and from this point, right, you can see that all the candles were kind of staying within this range, consolidating, and then we ran all the way down into the weekly fair value gap, which was the target. I didn't execute too much on here. I was mainly trading gold on my Top Step X account today, but I did take like a good amount of trades today. Number of trades 22. Like I said, it counts like when you add more positions, so it's not 22, it's more like 6 or 7 trades. And just to break those down, I was trading gold, right? So the first thing that I was trading is from the highs right here. I took a sell from the highs because I was anticipating the market to first draw into this 30-minute fair value gap, right? It doesn't even have to hit it, but the fact that this 30-minute fair value gap exists in the market means that it is going to be referenced at some point. Okay, so what I did is I saw that this liquidity right here was swept, this previous high, and I saw this 30-minute fair value gap. So I was like, okay, I'm gonna start aiming for this 30-minute fair value gap. I'm taking the sell from this liquidity. Like, it was a really simple trade. I didn't really anticipate anything much, other than the fact that this is lunch hour. So lunch hour typically creates a high, and then it melts off, and then you later target that high that was created during lunch hour, which is the 12 o'clock to 12:50. Like that 12 o'clock hour, basically. That's lunch hour. And so my draw on liquidity was this 30-minute fair value gap. Even though it didn't get to it, I continuously was taking partials, took partials here because I saw the macro. For those of you who know what macros are, let's take a closer dive at this. 12:50. Yeah, so exactly when the macro started, I was in this trade. Exactly when the macro started, I kind of anticipated that there is a likely chance that it can just continue going higher. So what I did is I just got out of my position right here once it swept. And I was like, okay, it's now possible to start looking for buy side. So I got out right here. As soon as it swept, macro opened, I'm like, okay, this is a perfect sweep as soon as the macro opened. And typically we see like a lot of buy side when that happens. So I got in my position, secured my profit, which is like the bulk of all the profit that I made today. It was probably like 1,000. Everything on top of this 1,000 was little scalps that I took afterwards. And those scalps started from the 5-minute time frame after I got out of my position. I was observing like why it started reversing. What are we looking for? And as I sent out right here on my, so I was talking with you guys in VIP chat, but the main thing that I sent out here was the draw on liquidity. So I tagged you guys end of day draw for GC1, which is this lunch hour buy side. Same thing, guys. It doesn't even have to draw to it. Like I was telling you guys, we can like demo trade this to kind of show you. It doesn't have to get to your target for you to take a profitable like position. All you have to do is kind of ride it until you see that potential for it to start reversing. That fair value gap that it doesn't close above. You start taking partials. And then you ended up with a profitable day. Because like even though your target wasn't hit, you layered it correctly. So the reason why I was expecting this buy side is because it was significant buy side. It was created after 12 o'clock started. 12 o'clock started, we created a high. And then we ran off. And this is a 5-minute fair value gap. I don't know if I marked out the IFEG for you guys, but there was also an IFEG, and that was kind of like my confirmation for my trade. Yeah, I marked it out right here. So, right, we didn't end up closing below this bullish fair value gap, because if it did close below it, then I was likely going to aim for this 30-minute fair value gap and then buy side. So it didn't, and instead it closed above here, and then that's when I got into my position and I just rode it towards buy side. Like it doesn't even have to, I didn't even get in from the like tap back into it. As soon as it closed over, I was like, okay, we're going back to buy side. I got in, held it, and secured like 600 on this move. I don't know if like there's like trade executions that I could show you guys here. Let's see. I don't think so.
Yo, Marky.
Yeah, what's up?
You said you were talking about that 30-minute cap, but why didn't you reference the 1-hour one instead? Because usually if it's like a 30-minute, 15-minute, you just go for the highest time frame.
Yeah, it's just because it aligned. Like I did look at the 1 hour just to make sure, but it was like pretty close. And the thing is that it didn't like actually run down to it. Once it like kind of started stopping the momentum right here, I was already like, okay, I don't really even need to reference the lower like fair value gaps because it's likely going to reverse. Just because of like extreme bullish tendencies, you don't always see that kind of liquidity sweep. But yeah, that's a good point. If the 1 hour exists, mark out the 1 hour. And that is, on my part, just I should have marked it out on the 1 hour because 1 hour is more significant. Like I always tell you guys, why would you look at the 4 hour when the daily exists? So on gold, for example, let me actually start from what I started trading yesterday, which was this. I've mainly been securing like payouts on my small account just from swing trades. On these trades, so what I was anticipating at the start of the week, let's see what I shared here. Okay, the IFEG, right, on the daily time frame. And what I said is, if price runs down here on XAUUSD, this will be the highest probability buy of the month. And I can't say that I'm wrong, because let me mark out this IFEG. Marked that out a few times on my phone, so it just kind of overlaps. 1 day IFEG, so it's the daily time frame IFEG, and it closed above, and it ran back, tapped into it. The reason why I said that this was going to be the highest probability buy of the week is because of what happened here on the weekly time frame. You guys see this? Weekly fair value gap. Right here. We tapped into it and we ran from it. Why? Because previous month was supposed to be bearish, but instead it was extremely bullish. So this month is also likely to be extremely bullish. So when we tapped into this, this is like price returning to the discount so that we can continue riding towards buy side. Another reason why it was really high probability is because of the news on Thursday and this consolidation right here. So these highs are going to be a target for news. And we are right here on Tuesday, like down here. This means that like news doesn't even have the strength to get up there. Like it needs to be a little bit closer to those highs. So what I was expecting is it to like return back and start consolidating here until news on Thursday, and then we sweep those highs finally. So that's what I'm expecting for Thursday. So that's why I kind of like sent that out at the start of the week. I said we're looking for it to pull down into this daily IFEG. Monday close happened, and then what actually occurred is that we got another daily fair value gap right here, which made the buy even higher probability. Look at this. We tapped into the midpoint of this daily bullish fair value gap and this bearish inversion fair value gap. That's beautiful. So I did get into some swing positions and I secured like another 100. I mean, it's nothing much, but I'm still executing on these trades. And then I ended up passing the account with those two trades, these two copy trading accounts. Quite simple. Yeah, and then going back into the trades that I was taking today. On NQ, it was just this 5-minute IFEG. Once I saw that, I layered in my position and I held it. I just put my stop loss up in this, I don't know if it's 30-minute. Yeah, I think it was just the 30-minute fair value gap. Just because it was a little bit higher. Because I wasn't expecting it to run back above the 1 hour. So look at this. 1 hour IFEG is right here. So if my stop loss is a little bit higher, it's really safe. It's likely not going to be drawn up to there. And obviously my draw on liquidity was that weekly fair value gap on Forex NQ. Boom. Simple execution there. I broke down my gold trades already. It was just kind of the sell from the sweep of liquidity, aiming for the 30-minute/1 hour fair value gap right here. And then I switched up once I saw that it didn't actually clear this fair value gap. It didn't make the IFEG, and then we started reversing. We created a lower time frame IFEG, and then we started targeting the lunch hour buy side. And it just started consolidating. I didn't want to hold the trade, and I got out of my position. And now it looks like it might draw down and like close somewhere down here. That's kind of like a simple overview. Do you guys have any questions? Okay, do I still journal my trades? So this is a question, like an important question. You should journal all the time. And my journal, it's not a direct, like me journaling every trade that I take in like a journal. My journal is like this right here. I can look back and see every trade that I took that was a high probability trade because I send it out here. This is quite literally my journal because I see the before and after. I send it out before, I write a message. It's for you guys, like, of course, but this is how I journal my trades. I look back and I can see what went wrong, what I did good. Like my draw on liquidity. And then I see if it actually happens afterward. Tapped in and we ran from it. Always reference GC1. So, I don't know if he was in this call, UGFX, but he's one of my one-on-one students. He was telling me today that I'm not going to show the text messages, but he said that like I said, remember to always reference GC1. That's what I said because he was looking at XAU USD, and if you look at the daily chart, while it did tap into the bullish fair value gap right there, it didn't actually reach this bearish IFEG. And he was targeting sells for it in the morning because it didn't tap into it just yet. But the fact is, just like I've been telling you guys previously, that GC1 always, like the futures one, always reaches the target. And it literally respects this. Like if we look back on the data, every single time that there's ever been a weekly fair value gap that hasn't been touched on the regular gold chart, look, weekly fair value gap, and it runs without tapping into it. Another weekly fair value gap, and it runs without tapping into it. You see that? It didn't tap into it right there. It was really close, but it didn't tap into it. But on the futures chart, every single one of those instances, it tapped into it. So while I was also, some of those weeks, I'm like, oh, it didn't tap into it, I'm going to keep selling into it because it's a big draw on liquidity. But it did already. And that's the thing. Like that's why I'm telling you guys on the higher time frames, always use the futures charts because it seems like that's what it respects. Once a futures chart hits the objective, then it's going to start moving away. And yeah, that's the answer to your question. I journal like kind of for you guys. I don't really have to journal my trades. It's more like muscle memory for me already. I know all the stuff, and now it's just a matter of like being proper with my risk management so that I can survive on my funded accounts as long as I possibly can. Like it's not hard for me at all to pass accounts. Like I have no psychological threshold on those like challenges, and it's really easy for me to pass them because I can risk like 2K and hold the trade until it hits 8%. Like that's really easy. But on the funded account, like once I'm up like 2K, 3K, and I have that 60% profit split, I'm just like, this is a lot of money already, and I should stop here. And if I continue trading from that point on, I tend to make a lot of mistakes. And that's the thing that I'm still working on. And you guys will see that. Like I'm constantly reflecting on what I do. Buys at 10 a.m. and I got break even. On gold or NASDAQ? 10 a.m. Let's see. Yeah, because my trades realistically only started from like PM. So I didn't even really check what gold did at 10 a.m. You were trying to buy. Yeah, it looked like previously, like before that 10 a.m., it was just kind of consolidating within this area. Let's see, 1 hour also has a fair value gap right there. Yeah, I mean, if you got break even, were you trading on a futures account? Yeah, sure. Share your trade. I'll go over it. On futures, like you do have to be pretty tight with your risk. But even me, like today, I gave myself like a 1K stop loss because I wanted to build as much of a buffer. Like I have 1.8K right now in the account. I wanted to give myself as much of a buffer because Top Step rules is that once you take your payout after those 5 days, your stop loss adjusts from minus 3K to your initial starting balance. So if you don't have a buffer and you start taking withdrawals, you're going to lose the account after a few days. Like 2 payouts in, you're already going to lose your account. So my goal was to build as much of a buffer as I could on both of these accounts. It's crazy. Like copy trading is insane. Like I'm trading this account and I'm looking at this and I'm like, I'm going to keep going. Like this is already 2 accounts. Yeah. And what I was telling some people that are also funded now on Top Step is during those first few days when you have that 3K drawdown, you should aim for as much as you possibly can. Let your first few days trades like run pretty far. Try to build up as much as a buffer as you can. That way you could like beat the prop firm's rules. And you could hold your account because you'll have a bigger buffer. On trade day, that was what I did. I just ended up withdrawing. Like I was trying to see. They made me build a 3K buffer. And I couldn't withdraw until I made the 3K buffer. And then I was getting daily payouts on everything I made on top of that 3K on trade day. And then I was just kind of like yo, could I withdraw into this buffer? And I withdrew like 2K, so I only had 1,000 left of the buffer, and like I didn't know that they'd actually let me withdraw it, so it was kind of like a mistake on my part. I did pull out 2K from there, but I ended up losing the account just because I didn't have enough of a buffer to trade with. So that's why you kind of have to be smart with, like, when prop firms have specific rules. Oh, I see. So you got in like at one of the first candles, and then it pulled all the way back and took you out. I see. Yeah, that's a little unfortunate. Yeah, exactly. Especially the trade day accounts. Like, they're $200, and when they have like this 50% discount right now, it's $100. Like, I'm probably gonna start working on another one soon. Yeah, so in this situation, what happened is, like, yeah, you're trading futures, so you do have to be kind of like tight with your stop loss anyways. But the thing is, like, if you have this like draw on liquidity, like, this is a pretty high probability buy from a daily, like, it just left the daily fair value gap. It's pretty high probability buy. You just had to make sure to secure your stop loss enough. So my advice in a situation like this is to give yourself enough room when it's a position that can run pretty far. You obviously don't know how much it could run, but if, just like this one right here, if it can run pretty far from this fair value gap, you want to secure your stop loss far, because as long as you survive your position, you'll make just as much as you would if you higher leveraged, just because it's going to run up a lot. So the idea is, instead of going in with like 3 contracts, you go in with 1 and you risk 1,000, which is the same that you would risk with 3 contracts. You just have a bigger stop loss now. And I mean, it's not like you were wrong right there. Your bias was correct. You took a trade from a high probability area, so you don't really want to blame yourself. Journal properly, say the market went exactly where I thought it would go, and I executed on it. I got stopped out at break even, but my bias was correct, and the trade actually ran to where I thought it would run. Like, ICT says positive journaling is what you should do, and that's what me and Christian do. Like, with you guys, we basically, like, it's kind of like showing off. But when I look back here and I see all these accounts that I've passed in the, like, in the past, yeah. So I kind of, all these trades that I've taken, all these accounts that I've passed, it's just kind of like a positive reinforcement of the idea that I'm a really good trader. That's what journaling should be. Like, when you look back on your journal, you should be like happy with what you did in the past, and it should reinforce the idea that you are a good trader and that you're going to continue getting these payouts in the future. That's why, like, I don't have much of that psychological threshold, because I'm able to hold these kind of trades and I'm able to pass accounts. Like, I'm not afraid of anything. The constant reinforcement, like, if you have this idea, I made like a psychology video. My YouTube videos aren't very high quality right now, just because I'm not like making clips and stuff from them. I should like overlay them with other clips that would help your like brain kind of process the information that I'm saying. But I was talking about like the idea of a pre-existing bias. Your pre-existing bias is that you're good at trader, right? You're a good trader. And how you reinforce this idea to believe it fully. Like, I believe that I'm a good trader fully, like with 100% confidence. How I reinforced that confidence is through like consistent results, proving that I'm a good trader, which would be passing accounts constantly and getting payouts and understanding the market. So when I look back and I see this constantly over time, that I've passed accounts, that I've gotten payouts, and that I've understood where the market's moving over and over again, it reinforces the idea that I'm a good trader. And that's why I believe that fully. Your journal, it should prove to you that you're a good trader. I hope you guys understand what I meant with that. Yeah, ICT always says you should take the stop loss instead of break even. Like, when you're starting off, just to kind of allow market to move around a little more. But you shouldn't think about what you should have done or shouldn't have done. Like in your journal, you shouldn't say, I should have left my break even at my stop loss. Because it's better to take a break even. Like, what if it kept going lower? Right? In that case, you would have been glad that you took break even. So it doesn't matter. Don't journal like that. You should just say, that it looked good, and that you'll take it next time. Next time, it might not pull back like it did today. Yeah. Maybe it was just the fact that it already left the weekly or the daily fair value gaps, and you were like, okay, it might want to run back down here before going higher. And that's probably why you felt safe to go break even. But in that case, like I was saying in one of our previous streams, like last week's stream on Thursday, I said let's stop trading right now and come back to it in PM session. You guys remember last week? Let's go over those trades. Yeah, it was this one. This trade right here. Remember, we had a stream this day, October 10, going live in a few minutes. We had our stream. Christian sent out the NQ trade, and I was like, okay, as for the next trade, because it kind of like stopped us at break even, I was like, let's wait until PM. So for in my time zone, 9 o'clock is 12. So this is already PM, 12:47 in New York time. And I saw this 4-hour for rally gap. I said on the 4-hour time frame, this 4-hour candle is about to close inside of this wick. Then I dived on an even lower time frame, and I said, okay, in 3 minutes the 4-hour candle closes above. We just created an IFEG on the 15-minute time frame. So see, I'm considering the 4-hour time frame here because we're leaving the weekly fair value gap. We have a 4-hour wick and a 15-minute fair value gap. So I just combined 3 time frames to support like my trade. And we took that trade from the IFEG. Right, there you go. That's our trade. Then it ran up and closed above another fair value gap, creating another IFEG. And then it tapped back into that other IFEG. And it was a macro. I said that I'm going to get out after this macro. The macro just started, and we tapped back into the other IFEG, and we continued going higher. That's beautiful. And then we close our trade right there.